There we go. Good morning, traders, and welcome to today's edition of the Market Brief Live. So, I hope you all can hear me loud and clearly. If you can, please drop me a comment. I would really appreciate that. Let me know where you are logging in from. Let me know how things are looking on your side, and if there's any specific charts or analysis or anything you want me to look at, feel free to pop it for me into the actual comment section, and I'll be more than happy to look at any of that for you here today. So I think let's get into the actual session. Let's see what's going on. I see we have quite a few people already here. Some people have already liked and so forth. Please remember to do like that, press that like button as well as the subscribe button. As if you are not subscribed to the channel, you will unfortunately not be able to comment. Or ask any questions or anything in that regard. That being said, to those of you who don't know me or, don't know what the show is about, let me start today off with a question rather. So do you ever feel like markets are playing chess while everyone else is still learning checkers? Well, I feel kind of like today's moves are full of strategy in that regard. If we have a look, some of the currency pairs and everything I'm going to be discussing today, we are looking at Japan's political shakeup, Bitcoin's current mood swings, and Wall Street's doing its best impression of a comeback movie. For those of you who don't know me, my name is Francois. I'm your market analyst here at ATFX Africa. And each morning during the market brief, I unpack the biggest movers across currencies, commodities, indices, blending your fundamentals and your technicals, and just adding a bit of common sense. Because let's face it, markets don't always make sense. That being said, please also familiarize yourself with the disclaimer currently being displayed on your screen. This disclaimer, in short, basically just states that everything that I will be sharing with you during the session here today is for informational purposes only. At no point in stage during today's session will I be providing financial advice. And if you do require advice, please contact the financial advisor. Okay? I think that's kind of the easiest one on this. Again, the live chat today is very, very quiet. Does no one want to talk to me today? Are you all just dead quiet there? I said I won't be providing financial advice during the session. So everyone just decides, okay, cool, then we're not going to speak to you at all. That's not nice. So I do hope I'm going to start seeing some comments coming through, some questions coming through from you as well. So, that we can have a proper conversation and live session here today. So let's kick things off today with currencies. And I want to specifically discuss the yen. So when we are looking at the yen at the moment, it is currently trading water near 151 per dollar. To be exact, 157. I'm going to put on the chart just now. Which is actually quite nice because now we are starting to see a reversal, which could provide some nice setups for today as we are getting into the session here. So I just want to see here if there's maybe a setting problem on my side. So, no, still not seeing any comments coming through. Maybe, like I said, I thought it was just a setting problem on my side. Okay. So, after this little bit of a rebound prior to this little bit of a rebound that we are seeing at the moment, we saw 3 consecutive days of losses for the US JPY pair. And obviously, if we have a look at just the yen, then we've also seen 3 consecutive days of losses just for the yen, especially if we zoom out to about a 4-hour chart, you'll see it's just been slowly ticking higher, and the dollar has been gaining on that end. Now, this is primarily because of political developments that are currently taking center stage in Tokyo. So all eyes are currently on parliamentary vote, which what confirmed that, I really hope I'm going to get her surname correct. It is Takaichi, who is now officially Japan's next prime minister. And not just because she's the first female to actually hold the office. And this is obviously creating a lot of controversy within China. Now, her party, the Liberal Democratic Party of Japan, secured a coalition with Japan's Innovation Party, which signaled a bit of a tilt towards expansionary fiscal policies and economic reforms. Now, a lot of these things sound very promising on paper, stimulus, growth, reform, but there is a twist, and this is where things start getting a bit interesting. So, expansionary fiscal policies often mean that the central bank can afford to stay dovish for longer. And for the Bank of Japan, that's music to the market's ears. Now, as traders begin to speculate that rate hikes could be delayed further despite recent hawkish commentary. However, if we have a look at the coalition again, combined, they only currently hold 231 seats, which does fall short of the majority. So there is now uncertainty that is lingering within this about how stable this political partnership will be and whether the new prime minister can actually push through her ambitious agenda. Meanwhile, Bank of Japan board member Takata added a dose of intrigue by saying the time is ripe for raising interest rates. Now, that's a bold statement considering the fact that the Bank of Japan is famously cautious, and it keeps the market guessing whether Japan will stick to its, ultra low policy or finally take its footing or its foot off the gas, if I can put it in such a way, and, start making some changes. If we add on top of all of this as well, a softer US dollar has capped expectations that the Federal Reserve could cut rates later this year, and we've got a bit of a classic tug of war here between two currencies. Now, fiscal optimism weakens the yen, while monetary tightening talks tries to support it. Okay? That being said, let's have a quick look at charts here at the moment, and just so we can actually have a look at what's going on here today. So let me just see why is it not bringing up my chart. Let me just see why it's not bringing up my chart. There we go. Okay, so there's the USD JPY chart at the moment. Now, as stated, currently trading around 151 or 150 or 51.7, with upside momentum currently clearly building on this one here specifically. Now, resistance is currently stacked. We just broke through this first one here at 151.3. After that we've got this one here. As you can see, this previous high point here at 152.5. And then that high point at 153, 152.5. So definitely quite a bit to look at in regards to this. Just want to see here. It's bothering me that no one is sending me a message because I'm sure I'm missing it somewhere. So let me actually just see. Let me do this. Let me see if that helps. I really hope I don't disconnect. There we go. Okay, now I'm back up. And I already see that Bridget actually sent me a message that I missed previously. So, okay, that did help. I do hope I'm back. I hope everyone can see me and hear me again. So, hope everything is running smoothly on that end once more. Now, yeah, okay, so getting back to USD JPY. Okay, so obviously answering the question that was asked there as well, the gap's not been filled yet. The gap hasn't been filled yet, but also remember, the gap isn't necessarily to be filled. Okay, we have to understand that as well. There's no guarantee of that gap being filled. There's no market rule that says that gap should be filled, or there is no trading strategy attached to that gap being filled. These are things that we have to accept in that regard as well. So what does happen is obviously if we have a look at, for instance, the classes that I've given recently with regards to SMC and so forth, is yes, we have a fair value gap here now, which normally means market will return to that fair value gap, dip into it, not necessarily close the entire gap, but just dip into that fair value gap, fill orders, and then move higher from there. Now, what we can see happened is market did move, came close to this EMA, which was close to that fair value gap. We could see quite a bit of orders being filled at that specific point. You can see that very nice rejection. And now market's pushing up from there. So markets didn't actually even reach that fair value. So there is still a chance for a bit of a retracement, but maybe back to this 48.5 just to fill some of those orders and then continue. But as it looks currently, there was still a large amount of orders laying somewhere around here, which once filled just pushed the market higher from there onwards. So Bridget, answering your question, I hope in that regard, is that it doesn't necessarily mean that just because there is a gap that the gap should be filled. Okay. I hope that makes sense. Looking at this from a different perspective and looking at it from where we are sitting at today, as we have broken now quite nicely above this resistance, personally I believe we'll push now to this 152.5. But if we do break that 53 level, even 53.2, that would mark completely new territory for the yen, and specifically for this year. Let's put it that way. Now, there is quite a bit of support. I don't see us reaching that very soon based on where we're sitting at the moment. Broadcast, welcome. Seeing your hello pop through now as well. So that being said, let's look at some lower time frames, see if there are some positions. Actually, there's actually a very nice position right now on USD JPY. There's quite a nice setup here at the moment. Again, please remember, not financial advice, just looking at price action here. So I'm here on the 15-minute time frame at the moment. We obviously saw this very nice break above our resistance. Beautiful retest. And what have we got now? Now we've got this clean break of structure here. So see here, based on the downtrend that we had here we had our initial change of character. So there's our change of character that broke through our resistance, came back for a retest, and now has broken structure there. So this could potentially be a very nice setup with, I would say, stops around that 151 level. That could be quite ideal. And then at least just aiming for 152.5, which gives you about a 1-to-1 on the ROI. But there is also that extended push possibility to that higher resistance which then pushes your ROI to around that 1 to 2 ROI ratio. So definitely a nice setup that has now presented itself. This is on the 15-minute time frame. Just based on price structure at the price action here at the moment, we can obviously see nice clear break of that downward trend, beautiful retest, and now that break of structure on the 15-minute time frame. So definitely for now, bulls remain in control, but please keep in consideration that there is still the possibility of a lot of political volatility that could change the tone of this specific currency pair very quickly. So again, regardless of what setup you take on this currency pair or any other currency pair, please remember to add in your risk management accordingly. Okay. If there's any other questions or anything specifically you want me to look at, please drop me a comment and I'll be more than happy to assist with that as well. Okay. Perfect. So let's move on. You guys are so quiet today. I feel like I'm speaking to myself, and it's terrible because I'm already not feeling great. Got a little bit of flu. So now I'm keeping a conversation here with myself with a slightly blocked nose. Like, under no circumstances is that a good idea. But yeah, I do hope you can all hear me, see me, and everything nice, loud, and clearly. So I want to move over here today so we're going to move over to cryptos a little bit. So moving over to Bitcoin, and some very interesting developments taking place here at the moment as well. So just going to zoom out a little bit there, just so that you can all see exactly where we are sitting right now with regards to this one specifically. Now, if we do start talking about cryptos and Bitcoin specifically, yes, it is trading around that $108,000 mark, which is just down under 2.5% from yesterday. So yesterday's close to where we are now is about a 2.5% drop. But again, this is not telling the entire story. So last week, we obviously saw Bitcoin plunge to a 3-month low near 104,000 as global market sentiment surged on renewed U.S. banking sector fears. Now, if you don't remember what happened, the local U.S. banks reported on some bad loans that increased their risk profile and so forth, and this created some flashbacks of a banking crash that people really started wondering about the market. Let me put it that way. Now, add into that prolonged government shutdowns currently now in its 4th week, and Trump's tariff threats that are reigniting US and China trade tensions. And all of this is creating that perfect combination for fear. So traders rushed into cash, so more your traditional fiat, and we saw a nearly $20 billion worth of crypto positions just liquidated, which reminded traders that crypto volatility never really takes a break. But as fast as the sell-off came, sentiment did shift relatively quickly, and this was primarily due to President Trump, which took a bit of a softer approach or softer tone with regards to China, saying that a fantastic deal could still be reached. And this helped markets breathe a little bit easier, with Bitcoin then bouncing nearly 3% higher from those actual low points. Now, add on to this persistent speculation that the Federal Reserve could cut interest rates in the upcoming meeting now next week, which will take place on the 29th. And then we'll have another one in December, which also there's a lot of bets for potential rate cuts at that one as well. And suddenly, if we add all these things, crypto found some room to recover. Now, that recovery has retraced quite a bit today, and we're going to discuss some options here for us today. But if we have a look, lower yields and a weaker dollar often act as tailwind for digital assets. So there is definitely still possibility for some upside momentum. And then if we even look on the institutional side, strategy, formerly known as MicroStrategy, continues to play that long game on crypto, especially on Bitcoin. The firm has added another 168 Bitcoin to its portfolio last week, bringing its total holding to 640,418 coins, which is valued at over $71 billion. Now, that means that one company, MicroStrategy, currently holds 3% of Bitcoin's total supply. And yes, the CEO, Michael Saylor, is still smiling. He still believes this is going to go higher, and that's why he keeps buying this large amount of crypto. Now, meanwhile, adding to more good news for crypto, the UK Financial Conduct Authority, so the FCA, officially lifted its 4-year ban on crypto exchange traded products. So, which is now opening the door for retail investors to access Bitcoin and Ethereum using ETPs, which is an exchange traded product. I hope you all know what ETPs are. If you don't, let me know and I'll explain it. Okay. Which after this was allowed, we saw firms like 21 Shares, Wisdom Tree, and Bitwise, which launched products on the London Stock Exchange, while BlackRock added its iShares Bitcoin ETP, which is all signaling a new phase of that mainstream adoption into, the world's oldest financial market. So, the UK normally takes the longest to adopt anything when it comes to finances, especially because of the conservativeness. Now, despite all that, Bitcoin remains a little bit under pressure, as we can see, which is kind of sad because normally October is usually dubbed as Uptober for its bullish history when it comes to cryptocurrencies. However, so far, I don't know, it looks more like oh no Tober, with Bitcoin still down 2% for the month, give or take. Looking at the charts here, we can see that obviously Bitcoin is currently consolidating between this 103,000 support and this 112,000 level up here. Now, a break above 112 could see momentum push us towards this 115, maybe even higher. But if we drop below this 105, and this is currently where we're heading, there is a possibility for Bitcoin to come and retest the psychological level here at 100,000. Okay, so some options that we just need to look at. Now, overall sentiment is still cautious. Traders are buying dips, and we can see that based on the price action, but conviction remains low ahead of that next interest rate decision, which is due next week. So, yeah, do want to look at some lower time frames here as well. Sorry, traders, I see my camera cut out there. It should pop back up in a second. So if we are having a look here at the chart at the moment, we can see that there is quite a bit of consolidation that is taking place here on the half an hour. So this is the 30-minute time frame. So, just higher than this previous consolidation, but just under this actual previously support, which is now also acting a bit as resistance. So what we would want to see is, before this goes higher, is then a change of character, so a break above this, and then a bit of a retest, break of structure, and then we can get our buy. Here we already have that initial break of structure which we saw this morning. And so now we've got this consolidation. So should we get another break of structure and a break below this 107,100 level, that could potentially be a relatively nice setup for a position around here with a relatively tight stop, and then I aim for that 105,000 level that we just spoke about, and that'll give you about a 1 to 1.5 ROI as a trade setup on that one. But again, only if we get that continuation break of structure and a break below this smaller support area over here, that could actually lead to some options on this specific pair. Again, just providing insight on what I'm seeing at the moment. How you intend to interpret that is completely up to you. Just want to see. Roka says loud and clear, thank you, perfect. Bridget, that 15-minute candle, which is bearish, will wait for it to close. I'm guessing, based on the time frame, is she's talking about USD JPY. So I just want to go back there. Yeah, there's no bearish 15-minute candle. I mean, we already had that brilliant rejection there. Probably there was a bit of bearish movement here, so but we saw some nice rejection there already. So yeah, Bridget, you can let me know if you're in the trade or not. Sorry guys, like I said in the beginning, my throat is a bit sore, so I'm just going to take a hold just so that I can actually continue talking. So but yeah, I still believe this is quite a nice setup, and I think it's relatively clean and definitely some nice potential here. So, but yeah, again, should you enter into a setup similar to this, please just ensure your risk management and everything is on par. Okay, what else? Yes, please. What exactly is this exchange product? Okay. Let me explain. I'll put my camera on for that. Okay, there we go. So the majority of you have probably heard of ETFs. Now, an ETF stands for exchange traded fund. Now, an ETF, there's obviously multiple ETFs currently out, and ETFs are predominantly equities and bonds that they make a little bundle of, and you can then invest in that, such as the Bitcoin product and so forth that we have seen in launch in the US and so forth. But an ETP is actually, so ETFs fall within ETP. So yeah, it's an exchange traded fund, and then we get exchange traded product. Now, an ETP can be absolutely anything. There you can add cryptos, you can add commodities, you can add whatever you want into an ETP. So it's technically very similar to an ETF. It's actually the exact same thing. It's just, especially looking at the UK, they are a very old-fashioned, traditional, they're the oldest financial institution in the world. So for them, they stick to the original terminologies and everything that was laid out and used. So where they weren't listed as an ETF, because an ETF is equities and bonds, where an ETP can be anything that they want to add into it. Okay. So that just basically means that you can now invest into cryptocurrencies directly on the stock exchange, like how you would buy an ETF for S&P 500 or NASDAQ 100 or even the US 30. You can now buy ETFs that are linked to the price of Bitcoin and cryptocurrencies and so forth at a obviously much more reduced cost, which makes it easier for everyone to be able to invest into cryptos. Rocast, I do hope that answers your question. If it doesn't, please let me know. Okay. So, let's move on. And seeing that we are speaking of equities, let's move on to equities. So, today I kind of want to have a look at the Dow. It's Tuesday. I normally look at the Dow on a Tuesday, and we'll provide analysis on the Dow on a Tuesday. So, yeah. Now, yesterday we saw the Dow surge 516 points, which was a total of 1.12%. And, this made equity traders like myself, or index traders like myself, kind of take a bit of a breath of or a sigh of relief, if I can put it in such a way, as we saw some optimism return to Wall Street. Now, this rally, primarily if we're looking at the Dow specifically, was led by companies like Salesforce, Apple, and United Health. So Salesforce jumped 4.6%, Apple jumped 3.9%, United Health jumped 2.1%. Now, after a week of choppy trading dominated by political gridlock and banking sector fears, this was a bit of a change. So what changed? Now, first, the White House advisor, Kevin Hassett, told CNBC that the US government shutdown, now entering its fourth week, by the way, is likely to end sometime this week. Traders, that's big. If the government shutdown ends this week, that's big, okay? Now, that hint of progress was enough to lift sentiment, especially after several key economic reports like NFP and so forth were delayed or cancelled because of this impasse. Now, please remember that the CPI report will be released this week. It will be released on Friday. I will be analyzing it live with all of you, so please come and join me here on the ATFX Africa YouTube channel so that we can go through this report together. Okay. Then we also have the second thing that changed, which is the regional bank earnings that came in better than expected. So Zion Bank Corporation reported stronger quarterly results and smaller than feared loss provision, calming that worry that we had in the beginning of the week of another mini banking crisis, which could be brewing. Now, all of this resulted in risk appetite returning to the market, sending all major indices higher. The S&P 500 and NASDAQ was almost up more than 1% yesterday. And obviously, technology and financials were leading the way. Now, investors are now shifting their focus to earnings, which we are seeing quite a lot of on the earnings calendar. Netflix and Tesla are also due to report this week, two companies that are often capable of swinging overall market sentiment. Okay, but we need to remember that optimism is fragile. The CPI report, which was delayed by the shutdown, now coming out on Friday, remains a key risk factor. Traders know that without updated inflation data, predicting the Fed's next move is us flying blind. Like, it's very difficult. Still, yesterday's rally was a reminder that when markets start to panic, all it kind of takes is one good headline to turn the tide. Okay, so always keep that in the back of your mind. Regardless of how hard markets fall, little bit of good news, and we are back up. I do see Bridget says, Francois, what happened to NFP? So government shutdown. There was no people at work to generate the report. It's kind of that simple. So because no one generated the report, we didn't get anything. Okay, I hope that answers. Is probably the shortest answer I could potentially give here. So, yeah. Okay, so looking at our chart here at the moment, Dow is currently trading near that 46,700 level, comfortably above its short-term moving averages. So immediate resistance is currently sitting at that 46,800 level, followed by the 47,000 high point. And supports we can see here at around 46,300 and then 45,500. Now, both of these are, and you can see here and here, is where buyers might actually defend some of their positions. And we can see that has happened over and over again lately. Okay, so on equities, momentum remains positive. Even though, if we have a look at some of the higher time frames, there are some overbought signals that are creeping in. Here on 4 hour and so forth, there are some overbought signals that are creeping in. So we just need to keep an eye on that. And this is suggesting that some short-term pullbacks could be healthy before any push higher. Okay, so we might actually see a bit of a retest, maybe here at 46,300, 400, and then a push higher. So just some things that we do need to keep an eye on, keep a lookout for when trading these. Now, again, I want to have a look at some lower time frames. Now, here we can see we had this push up all the way, and then we had the change of character that took place right there. Now, again, I'm going to ask, what's the rule here? So if we base this on price action, we're obviously now waiting for a bit of a pullback, which we are getting. We're getting a nice set of consolidation once again. Now this, all we're waiting for now is maybe a pullback a little bit more, and then the break of structure. Now, once we get that break of structure, that could actually give us a very nice setup, which could lead to, maybe a nice tight stop loss. And then us pushing to these lower levels here around 46,300, maybe that level there at around 46,700, which gives us a nice 1 to 2 on that ROI scale. So, yeah, looking at it from this perspective, those are some relatively nice setups. Again, we still have to wait for price action to actually come to the party on this. The setup is forming itself very nicely at the moment. Even if we have a look at other ones like S&P, again, we got this nice move higher. We got that change of character. We've got that same consolidation now. So a similar thing here. If we can get a break of structure here, could open the doors to a very nice short position here as well. Exact same thing on NASDAQ. I mean, again, went to that resistance level there, change of character, consolidation. Now we just need the break of structure. Sorry about that, traders. And then we should be able to see a nice sell-off from there onwards. Okay. If there's any questions, anything specifically you want me to look at, please let me know. So, I mean, even on gold, went again yesterday, retested that high at 4,382, and all it's been doing today is fall. So massive pullback so far here. If we have a look from the close yesterday, we are currently down 2.14% already on gold here. So, but again, now it is starting to find a bit of support there. It's also at the bottom of this trend now. Again, bouncing quite nicely there. So we've got these obvious turning points that I've previously spoken to you guys about as well. And I mean, even if we go a really low time frame on this, yeah, you got that obvious turning point. And now if we can get, there's your double top, so your equal high. Again, now if we can get a nice little break, maybe a short retest and then a break of structure, could be a nice buy back up to this 4,345 level. Or if we break this week low, that, because there we already have the change of character, so this will actually then give us that break of structure, which would then continue this downward momentum potentially to this previous week low, which is sitting here at 4,218. So definitely options for us to look at here today, and some options to explore when looking at the markets, and just seeing some potential as to what could come and what potential setups we can have a look at. Okay. Traders, any questions from your end? Anything you want me to look at? Are we all happy? Did you get the information you came for today? Yes, no, maybe. Let me know. I appreciate that feedback. I really do. That being said, if there isn't any questions, I'm going to start wrapping up. So, obviously, please remember that today and tomorrow could be some action-packed series. Now, yesterday, we were off to a very slow start. I was a little hesitant yesterday morning, but, there was a very slow start to the week. Markets didn't do much, and then yesterday afternoon, it was like someone just released that rubber band and markets just started flying. So, yeah, we could see something very similar today happen once again. Now, so we might see Japan's leadership officially confirmed. Let's put it that way. We could see US earnings, if the government shutdown ends, we will see a lot of additional US reports come in as well. So that could spike volatility across the board as well. And then the question is, will the optimism that we saw yesterday on Wall Street, will it hold? Will that little bounce that we saw on Bitcoin last, or what could potentially happen? Or are we finally going to see, some big, large pullbacks? Well, that's kind of the question that we need to look at. So, Rocast, I've been using order blocks in reference with Asia, London, and New York timeframes. Is that good? It helps me identify possible good setups. So, using the high and low for various sessions as support and resistance is a relatively easy and good way to identify key levels. I'm not going to argue with that. Normally, I wouldn't really use the US because US has a lot of volatility, but Asia and UK do provide great support and resistance levels if you use their highs and lows that you can then apply to your actual charts. The US, if you have a look at that first 30-minute candle, and you take the high and low of that 30-minute candle, and once that high or low of that 30-minute candle is broken, that normally creates quite a bit of movement within the market as well. So that's also maybe something to look at. Okay. And you guys can go play around with that as well. So yeah, just obviously always apply your price action rules. Have a look for where you see that break of structure, change of character, new higher highs, higher lows, lower highs, lower lows, and so forth that form. And, trade around that, work around that, and then, proceed from there on forward. Okay. Perfect. So, traders, I think that kind of wraps up for today. Thank you so much for joining me. Sorry there was no market brief yesterday due to worldwide internet blackouts, all editing software and everything just decided not working today. So yeah, even though the video was recorded, everything was not possible to get it out to you guys. Sorry about that. Now, obviously, that wraps up for today. Always remember, this session is brought to you by ATFX Africa. So ATFX Africa is the broker that gives you an edge in today's markets. If you're not trading with ATFX yet, or you haven't experienced the difference for yourself yet, there's a link in the description. Click on it, go to the website, and go have a look for yourself. Until next time, stay sharp, stay focused, and trade smart. I will see you all tomorrow. And also, please remember, tomorrow evening, I am giving a live masterclass here on YouTube on scalp trading. So come join me for that. Looking forward to seeing you all there. Have a lovely day further. Bye-bye.